Hey guys, what's up? It's Ace Trader coming to you with another video. August 23rd, 2:40 p.m. Cali time. Market closed about an hour, almost an hour and a half ago. Huge down day today. Did make some money though. I scalped actually the last hour of the market as it sold off and did pretty well. But anyways, I wanted to make this video. This is going to be kind of like a continuation of the video that I made on Bollinger Bands. What I wanted to do is add kind of another dimension, if you will, another flavor to using Bollinger Bands and a chart pattern that I love, that I've made a lot of money on. It is called the Bollinger Band Squeeze, okay? And we're going to go ahead and utilize the Bollinger Band Squeeze with this indicator down here called the TTM Squeeze, which I'm going to explain to you in a moment. But before we hop into this indicator here, what I want to do is just explain exactly what a Bollinger Band Squeeze is, what it looks like, how you can identify it, and how you can go ahead and profit from it. So I think I'm going to go to, I don't think I want to start with this chart. I think I want to actually go to Qualcomm because I believe, if I'm not mistaken, yeah, this is a little bit of a better chart, at least to begin the explanation, and then we can move into viewing a couple other charts. So what is a Bollinger Band squeeze? Well, literally, it's when the stock you're looking at slows down and the volatility contracts and price starts to move sideways. Once this happens, this is when the Bollinger Bands will begin to squeeze together and they begin moving parallel. This is actually called a Bollinger Band squeeze. I like to call them squeeze trades, but let me show you exactly what I'm talking about here. Let me zoom in a little bit. And let's start over here. And you'll notice that, okay, let me bring in my drawing tools. You'll notice that price was going ahead and was moving down here, and we see prices coming down, okay? And then we get into this area right here, okay? This literally is where the Bollinger Band squeeze is at, okay? The Bollinger Band squeeze is starting right here. It's literally starting right here, and then it kind of gets into this little choppiness. But what are you noticing with the Bollinger Bands? Notice here how wide the Bollinger Bands were right in this area right here. Okay, the Bollinger Band squeeze comes into play when the Bollinger Bands go from being like this, which is showing volume and volatility, it's showing this downward movement, and then when they start squeezing in here and in here, that's when you know you're in a Bollinger Band squeeze. Now, this indicator down here called the TTM Squeeze, I'm on Thinkorswim, so you can easily put this on your charts. It's a Thinkorswim indicator. This shows when this price action is happening, okay, by turning the dots from green, as you see them here, to red, as you see them here, okay? And you'll notice that this totally works in the sense of it shows you when these Bollinger Bands are squeezed, okay? This is literally a volatility squeeze area. What this is telling you is this is basically saying that there's energy forming here. There's energy forming in this area right here, and there's going to be a good possibility that when this energy explodes, you're going to see a move either here or you're going to see a move either here, okay? But what you want to focus on is when you get that squeeze, this is almost kind of like when you see the Bollinger Band squeezing, you see price going ahead and consolidating like this, and you see the red dots forming down here. This is screaming to you something's happening. There is a potential volatility squeeze that's going to fire, and when it fires, it's going to go ahead and fire, and it's going to move in one direction or the other, okay? So when these candlesticks are squeezed, they can remain contracted and consolidated for a long time, or it can literally be a very short squeeze. And you'll see, like here, another great example of a short squeeze. And what I mean a short squeeze is, look at the difference between how many red dots appeared here in this squeeze, okay, and how many red dots are appearing here in this little bitty squeeze we got going on right here, okay? And then, of course, look what happened. When the squeeze fired long, boom, to the moon, okay? And you had this nice, huge breakout candle. You even had the next day, there was a gap right in here, but you continued to see a price move upwards. So these are extremely strong moves when they do happen. Does it always happen that strong? Not always, because I mean, look, when this thing fired here, you got that downside break. It wasn't as volatile as this here, but could you have made money in this area? taking this down? Absolutely you could have. So once again, regardless of whether it's going to be a long squeeze or a short squeeze, the moves can really be quite extreme once the Bollinger Bands do, as we call it, quote unquote, fire off. You know, and just to reiterate one more time, it really doesn't matter the length of the squeeze. I just want to make sure we're on the same page. It does not make a difference, the length of the squeeze. What matters is the fact that the stock is not going to stay consolidated. It's not going to stay in these kind of areas for a long time. It is going to move, and when it moves, we are going to see that rapid expansion. The volatility, you know, the volatility will expand, and there's going to be a strong price action movement, either up, like right here, or down, like right here. Okay. I want you to think of the squeeze as think of it like a coiled spring. That's kind of what I'm trying to think of here. So this area right here, this area right here, these areas, and we're going to go to some other charts and look at how this plays out, but I just kind of want to get you guys your mind wrapped around this. Okay, think of these areas literally as a coiled spring. Okay, so right here you have this area where price has consolidated. Okay, and we'll just use this one area right now for the example. Think of this like a coiled spring. Here, the spring is not coiled. Okay, the spring is moving. We got downward momentum. We have a move down. We have some volatility. You can tell with the histogram on the MACD pointing down, or I should say moving down. So this is not a coiled spring. This is a spring that's already been popped, and we're riding the volatility, the movement, the trend. We're making money, okay? But when you get into this area right here, this is your coiled spring. This is confirming your coiled spring, okay? So once that coiled spring, once it's compressed and it's pushed together, like I said earlier, it's containing a ton of energy, and when it's released, there will be an explosion. Not every single time, guys. There's no such thing as perfection in the market. You will get squeezes that sometimes go nowhere. It does happen. We might even find an example or two of it. But generally, most of the time, you will get an explosion to one side or the other, okay? The reason why I like these trades a lot, guys, is, you know, they allow us to really profit greatly on a risk to reward ratio, because they show us the beginning of a strong movement. You know, they show us that there is there's a new trend forming potentially, or the continuation of a trend with a big move to the upside. Let's say if it's an uptrend. So here's a great example. Here we are, we're uptrending, right? And, you know, right here we cross over the zero line on the MACD, so now we're in the bullish area over here. Okay, as you can see, we don't really have any volatility squeeze going on, but we do have this nice little upward move. So, you know, maybe you're in this trade, maybe you're making a little bit of money. You know, that's all great. Okay, and then all of a sudden we get into this squeeze area, and when we get into this squeeze area, which forms right here, and you'll see that here. So when we get into the squeeze area, whoops, I just erased that. Did not mean to do that. Let me go ahead and do this here. So when we get into the squeeze area, what we're actually starting to think, what should be going into your mind here is, okay, we just entered a squeeze and price action was going up and now it's dipping down, okay? Does that mean the squeeze is going to fire to the downside? I don't know. Does that mean the squeeze is going to fire to the upside? I don't know. But what I would tell you is something's going to happen. Okay, and also if you look here, look at the MACD, look at the histogram. The histogram's almost hugging the zero line, literally. In my humble opinion, I would be thinking this would be a break to the upside. And the only reason why I would say that is because the MACD's above the zero line, which means it's still in bullish territory. We're just coming off of a move to the upside. I don't think in this squeeze that I'm going to see a crash down. That's not to say it can't happen, because obviously the squeeze indicator is just letting you know, hey, something's about to happen with volatility. There's a volatility contraction. There is eventually going to be, that energy is going to get released. One way or the other is going to go up or down. But if I'm reading price action, if I'm reading the trend that it's in, this trend here, and if I get to this point where I get a little bit of a shallow pullback, and I'm starting to actually, I want you guys to see this, I'm getting a little bit of a shallow pullback here, I'm still bullish, to be quite honest with you. It hasn't even broken below the lower Bollinger Band. And let me just zoom in here a little bit if I can. So it hasn't even broken, there we go, that's a little bit better. So it hasn't even broken the lower Bollinger Band. And we can see that here. It's still above the lower Bollinger Band. So in this situation, I personally would, you know, and I get into a squeeze, I would personally be thinking that there's a good chance that this squeeze could go ahead and fire to the upside. And that's exactly what happened. So the squeeze fired, as you can see here, the squeeze fired long. And you see these cyan, the cyan histogram. I'm going to explain exactly what this means in a moment. But as you can see, when the squeeze did fire, it fired off right here. You could have gotten in right on this candle if you wanted to, this little doji type of candle, which is above this previously bullish candle. And then really where I would have liked to have gotten in, to be honest with you, is I would have liked to have gotten in right here. I'm going to draw this real quick. This is kind of like my resistance area. And so the minute that price broke through here, that's where I would have gotten in, okay? You could get in one of these two areas if you want to be ultra aggressive. Me personally, I like confirmation. The minute it breaks horizontal resistance, I would totally have gotten in that trade, and I would have gotten most of this candle up, okay? And then if you would have held on, you would have gotten this gap, and you would have been in here, and really there was no reason to get out of this trade. Really, you're good all the way through here. Probably even would have held on that doji, but I would have gotten out probably in the morning time on this second red candle going to the downside. So it's really amazing. Here, MACD's telling you no reason to get out. Look at the histogram. The histogram bars are pushing up. That's showing a massive amount of volatility. It's showing the energy release. Look at the distance between the MACD and its signal line. I mean, wow, guys, okay? Anybody who knows how to use the MACD, when you see this separation of the MACD from the signal line, that's just showing you right there, massive, massive volatility, lots of buying power, lots of interest in moving this stock up. So it's all just pointing, you know, yeah, you're in the trade, you're staying in the trade. Generally, when you do get a squeeze fire, these cyan histogram lines here, excuse me, these are showing also volatility as well. It's showing the upside volatility strength of that squeeze, okay? So you're really pretty much good to stay with this as long as these stay cyan. And if we actually go ahead and just, let's see, this last cyan, where does this go to? So this goes here, okay? Now, once again, I personally, I would have been out here on this candle, on the beginning of that candle in the morning time, because I'm just somebody, you know, I like to lock in profits. Now, if I had multiple contracts on, because as you guys all know, I'm an options trader, maybe I would have taken off half of my position, maybe I would have taken off most of it and just let maybe one or two contracts run. But if we take this and we follow this all the way down, where did it show us? It is showing us the first waning of momentum is shown on this candle, because if you look at this MACD histogram, it went from light green here where it was showing you, wow, lots of momentum, no problem, we're moving to the upside, lots of price volatility behind that upside move. But here it's starting to show you that momentum's waning a little bit, because now we went from light green to dark green. And then of course you see the momentum just trailing off, okay? So, and then here you almost get a divergence, because you see, you know, MACD's trailing off. This is still going up, but then what happens with divergence? You see this downward move, and then eventually it plummets down. So, like I said, personally, I would have been out on that candle. But I like, when I'm in these squeeze trades, to use the MACD as a little bit of my guide. Yes, I do look at the actual TTM Squeeze Indicator. I do look at the histogram here. On that TTM Squeeze Indicator, I am looking at this, but really I'm focused quite a bit on what's the MACD telling me, what's the MACD line telling me, what's the signal line telling me. I want to see a lot of separation, and I want to see that light green coloring on the histogram bar. As long as I see that and price action is confirming that as it's continuing to move up, I'm good. But the minute I go ahead and I start seeing, you know, these kind of bars printing, and I start seeing this on the MACD histogram, which is the waning of the momentum, regardless of whether this is a scion, I'm out. I'm out, or I'm reducing my position quite heavily. I could always get back in, guys. I mean, let's just say this thing went ahead and dipped down here, and it went boom, and it just continued. I mean, this is immediately going to go ahead and shift to the upside. Sorry, let me just clear that real quick. This histogram area is immediately going to shift to the upside. The separation will go ahead and continue, and I'll be able to get back in the trade if I want. And I'll probably keep 1 or 2 contracts on. Why not? I mean, I've made a lot of money from this move from here to here. So, I mean, yeah, I can definitely keep on, you know, a contract and see what happens. So that's kind of how I look at using the TTM. That's how I look at using MACD to confirm it. Price action. It really is, once again, a great chart pattern. The risk to reward ratio is phenomenal. I mean, this move right here from this breakout area on the squeeze is just absolutely amazing. One other thing I wanted to share with you guys, what makes a squeeze trade? You might be interested in that. Why is it squeeze? What does that mean? Squeezing happens when the Bollinger Bands, which these are, when they go inside of the Keltner channels, that's what creates that energy. It creates that squeeze, if you will. And I'm going to turn on the Keltner channels here real quick, just so you guys can see what those look like. Let's see here, Keltner channels. Here you go. Okay, so you can see here how when the Bollinger Bands are outside, let me get my drawing tools here real quick. When the Bollinger Bands are outside of the Keltner channels, there is no squeeze at all. There's no squeeze, okay? However, though, when you see the Bollinger Bands go inside of the Keltner channels, like right here, okay, and you can see the white Bollinger Bands, how they're outside right here. But look at that, what happens? They go inside of the blue bands. The blue bands are the Keltner channels. That's where you get the squeeze. That's where the energy buildup comes from, okay? And that's how you know something's about to happen here. Let me see if I can show it to you. Here you go. Here's another good one. Let me zoom in on this real quick. Actually, better yet, let me go like this. There we go. That's what I'm talking about. Okay, so right here, great example. So we have this move taking place. Markets going down. Bollinger Bands are definitely outside of the Keltner channels. Remember, the Keltner channels are these blue bands, and the Bollinger Bands are the white bands. So once again, as the market's moving, okay, and you have the Bollinger Band showing you, because of how the Bollinger Bands are widening out here and they're widening out here, they're showing you this move is in effect. This move is happening. There's volatility. You can also see that once again from the histogram on the MACD. You can see that once again from the separation on the MACD. Obviously, there's not going to be a squeeze taking place, okay? But what happens when everything quiets down after the move? Right here, things start getting quiet right in this area, and then you get this consolidation. Well, let's see what's happening in this consolidation area. What happens? Oh, what do you notice? All of a sudden, right here, you get the Bollinger Bands going inside of the Keltner channels, and they start right here, and they start right here. And you'll see the white part of the Bollinger Band going inside of the Keltner channels. When that happens, what happens here? We immediately start getting the red dots taking place, okay? And what happens to price? Price quiets down, and it goes into its volatility squeeze. Everything gets really quiet until, of course, that volatility explodes. You get that right here on this first candle with this green dot that's showing the volatility exploding out. And of course, we get that movement breaking through right here. And of course, once we go ahead and we see price action break to the bottom side of the Bollinger Band, it breaks underneath this horizontal resistance point. Yeah, at that point, this point right here, and let me just erase that. This point right here, you're looking at a good trade, okay? You're looking at a good trade. You're looking at the volatility heading down. You're looking at it heading down here. Of course, MACD crossed. Where is it? It's below the zero line in bearish territory. And then on top of that, you also have the MACD histogram bars too that are verifying the momentum in the move. So I hope that helps you guys out there. So that's pretty much the squeeze trade for the most part. Let me see here. I want to go ahead and take you through just a couple of other charts so you can see. I mean, I know we've just been looking at Qualcomm. I want you to see this on a couple of other charts here real quick. Here's LVS, and I'm going to keep the Keltner channels on, by the way, just so you can see how these volatility squeeze happens. So once again, here you go. You have, let me get my drawing tools real quick. You have this market move that is heading up, So we see the market move and it's heading up. And as that market move is heading up, obviously where the Bollinger Bands, they are outside of the Keltner Channels, showing, once again, volatility, showing that there's movement in the market, okay? But what happens? Well, as the market moves up and it starts to flatten out here, okay, what happens? Well, we see that all of a sudden those Bollinger Bands go inside the Keltner Channel. And you can see that right here. See the white part of the Bollinger Bands all throughout here. It's all inside of that blue band, which is the Keltner Channel. Okay, so that right here, my friends, volatility squeeze. And what do we know? Down here, your squeeze indicator is telling you something's up, guys. Something's going on, because all those red dots are telling you we're squeezed now. We are in a volatility squeeze. So what are you doing here? What are you looking for right here, guys? Think about this. What are you looking for in this area? I'm putting this bad boy on a watch list. I have a volatility squeeze watch list, and I'm going to watch this thing, and I'm going to see what happens. Because right now, I know we're squeezed out, and something good's about to happen, and I want to be part of that trade, okay? So what am I going to do? I'm going to watch it, and I'm going to put my horizontal lines here and here. Actually, I could probably lower that a little bit. Actually, you know what? I'm going to do that. Hold on one second, guys. I'll just erase this real quick. I want to put these lines on correctly for you. So I'm going to go ahead and I'm going to have my line here, now my other line here, and I'm going to be waiting for a break. Once again, when it comes to volatility squeeze is telling you that it's squeezed. It's not telling you which way it's going to fire. Okay, so we have to be willing to go ahead and, hey, is it going to break to the upside? Is it going to break to the downside once we're here and we have this this area of squeeze? Okay, I don't know. Once again, you can make that determination based on MACD. Once again, I would make the determination. I would be upside biased just because we're already in an uptrend. MACD right here is still above the zero line, although it has been trending down. It's still above the zero line. So I would be feeling like, man, when we break this, I think we're going to go ahead and we're going to get a nice little, when we break this area, we're going to get a nice little upside move. And that's exactly what happened. When this squeeze fired off here, and you're going to see it's fired on this one right here, what happened? Price immediately, boom, took off and started moving, and we were good all the way up here. You know, we were good. I don't see any reason to get out of this. Not even this candle here. I mean, this didn't even close 50% of the previous candle's body. So to me, I'm still bullish. I think the first candle I would have gotten out on would have definitely been this candle here. I would have been out. Okay. However, though, I mean, if you wanted to play it safe and you want to go on MACD, once again, look at MACD. Where's MACD at? Well, the histogram ended here. So if we take this and we move this up, you could have exited on this candle right here based just on MACD histogram, but you would have gotten what? 1, 2, 3, 4, 5. You would have had 5 days of price movement to the upside. You think you could have made some money on that if you were long calls? Bet you could have. And then once again, here's another great example of the Bollinger Bands going inside of the Keltner Channels for another squeeze, as we see right here. So we're squeezing again. And once again, notice the difference in length. It doesn't make a difference how long they squeeze. Look at how long that squeeze is, and look at how long this squeeze is, guys. 2 totally different lengths, okay? But here's the funny thing. Shorter squeeze here, more volatile move, though, to the downside. Okay, and you could have caught that downside move just by watching this squeeze area, and I'm going to actually box in the squeeze area for you so you could see it. This is the squeeze area, guys, right here. That's it. That is it. That is the squeeze area, okay? And what you're going to notice also when I take off this rectangle and I put on the arrows again, look at how the Bollinger Bands are squeezing inside the Keltner Channels. Okay? And once again, the squeeze indicator is telling you, we're squeezed. Where's price going to go? Is it going to go up? Is it going to go down? Well, can't tell you that, but it can tell you it's going to go in one of those 2 directions, because volatility is definitely, it's that spring coil that we talked about. Volatility sprung, and where it broke was right here. And you can see that, because you can see that white Bollinger Band line coming outside. It's now going outside of the Keltner Channels. It's also happening right here too. It's going outside the Keltner Channels and going up. And of course, as you guys know who know how to use Bollinger Bands, which if you watch my other video, you do, when the Bollinger Bands go ahead and they expand out, that means volatility, that means price actions happening. MACD is confirming this once again here and here and here. And I mean, gosh, look at this. You got not only the histogram, but look at the separation. I mean, holy guacamole, guys. That's just showing you nothing but momentum to the downside this entire freaking move. And you could have gotten into it. Why? Because you saw it squeezed, you had the squeeze meter on, and you knew it's breaking in one direction or the other. Which way is it going to break? Of course, you want to use your, support and resistance areas. I mean, once it broke here, if you're just going across and you say, okay, maybe it's going to get here and bounce and go up here. But man, when it broke down here on this candle, is there any reason you shouldn't be in this move right here? MACD's telling you should be in the move, and even still, the TTM squeeze is also showing you should still be in the move. There was no pullback at all. It's just, you look at this, it's a straight line down, 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 down. Okay. So anyways, that's it. I know this video is running a little long, 25 minutes. I'm going to end it here. I had a couple other charts I was going to show you guys, but I don't want to make this too long. It's already too long. It's too late. But I wanted to go into detail, show you how I like to set up and look for these squeeze trades. They are money in the bank, guys. The risk to reward ratio is phenomenal on them. You see it, you saw it in this move here, this drop down move that I showed you it was this drop down move that I showed you here. This drop down move, this is all squeezed. This is all a squeeze move. So I mean, your chances of making a lot of money on a squeeze are really good, whether it be to the upside or downside. If you like the video, guys, make sure to give it a like, subscribe to my channel. I'm going to continue throwing on trade content to help you guys become better traders. I definitely love giving back to the trading community. I didn't have a whole lot of that. I had one mentor when I started. Most of everything I learned on my own. So I love giving back and helping guys and gals out there learn how to trade and be profitable and manage their own money. So once again, throw a like on the video, subscribe to my channel. If you have any questions, post them down below in the comments section. You guys have yourself a wonderful weekend. It's Friday. Hope you guys did have a great trading week, and I'll check in with you on the next video. And if there's anything you want me to make a video on, definitely leave it in the comments. I'll be happy to throw a video up on any topic you guys want to hear about. All right. Take care, you guys. Trade well. See you.